Buy or sell the merger arbitrage ETF. First off, read this disclaimer carefully and do your good deed of today by liking and subscribing. So we go here, and here we can find the IQ merger arbitrage ETF. Yeah, pretty close here to the 52-week lows, and we have seen around 6-ish% pullback. So let's quickly sort of get the gist of what this is about. So MNA aims to generate returns through a passive strategy that represents the global merger arbitrage activity. The fund takes long positions in stocks that are reported targets of takeovers or acquisitions and other buyout-related transactions. The underlying index seeks to capitalize on the spread between the target company's current market stock price and the price of that stock received by the holder from the buyout transaction. Okay, so that's the basic way it works. So here are the weekly data points, and we do see that there were some rather good time cycles. So especially from here, rise, decline, rise, decline, rise, decline, rise, decline, rise, and we have certainly seen a bit of a decline. The decline here is supposed to end, late this year. So basically, it's becoming more and more interesting from a more bullish perspective. We do see that we are currently testing a very, very important moving average, and that is the red 200-week moving average. We are not testing it yet, but we are very, very, very close, and the history, it's been pretty favorable for the bulls. So how far are we away? 0.60-ish% below us. So very, very close. So definitively this looks interesting. From a more bullish perspective, looking here at the daily data points, you could make the case that this potentially could become a bit of a double-ish bottom pattern. That's a bullish pattern. We are below all the moving averages. So we don't have any help from them, and because we are below the moving averages, they are likely to offer resistance during a potential rally. When we look here at these indicators, we do see that RSI has been lower in the past. So back here during the lockdown plunge, we did go much lower, but back here, this kind of RSI formed a very, very key low, and if we actually have to go even further back here, we had RSI around this territory, and that led to a rally. Looking at the PPO distance from 20, 50, 100, and the 100-week moving average, we are at lows that have been bought in the past. Going to the daily data points, we have a similar message. Looking here at accumulation distribution, you see here that on that indicator we've made actually a low here. So here's where we made a low, but accumulation has actually been rather steady, notwithstanding the latest pullback, which means that there are certainly some players here in the market that are buying. So that is interesting. MACD tried to send a bit of a bullish signal here, but didn't fully get to do it. But the MACD is also an indicator to have on our radar. Looking at the correlations, then we do have a 66% with the S&P 500, 58% with the investment grade corporate bond ETF, then minus 13%, so very modest, very low here with the 10-year yield approaching, almost, zero would be no correlation. And then minus 72% with the dollar index. Short-term correlations. Here we have a very low correlation now with the S&P 500. It actually is one of the lowest. It is the lowest we have had in a long time. So minus 81% here. Minus 25% with the corporate bonds. almost no correlation whatsoever with the 10-year yield, 5%. And then minus 83% here with the dollar index. And that correlation is also at an historically very low level. It usually is not that low. Looking at the seasonality, over the last 5 years, we see substantial increase in strength from November to December and January. That is bullish. Over the last 13 years, December and January, and also frankly February and March, they are strong months for this ETF, which is not bullish. Looking at Finviz, nothing in particular here with the trend lines. So if you look here, at the expense ratio, 0.77%, it's a bit high, but there's not much competition in this space. Assets under management, $703 million US dollars. The daily dollar volume is only around $3 million, so there's not that much, because this is one of the more esoteric ETFs. But then again, it is an interesting way to diversify. I think that this is it's an interesting opportunity, and it's a way to also get exposure to something a bit more exotic. I mean, if you tell your buddies that you have a merger arbitrage ETF in your portfolio, then you certainly are going to sound way more sophisticated, and it is more sophisticated. This is one of those strategies that is used, by fancy funds, like hedge funds and the like, because there's the potential for very significant alpha in arbitrage. I think that the technicals here were very interesting from a bullish perspective. We had the time cycles, we had moving averages, the moving average, the seasonality, definitively bullish. So I think that it's way easier to make a bullish case here than a bearish one.